To today's webinar. We are presenting this morning an update on the PPP program, along with loan forgiveness for that program. And then we're also going to talk about what's next in coronavirus legislation. We're very pleased to have our sponsor this morning, who is First United Bank and Trust, and I believe that Josh Bosley is on the webinar with us. And Josh, would you say a few words about First United Bank and Trust?
Yes, I sure will, and thanks, Nicole. And I'll probably say more than a few words. I think Phil had told me maybe 2 minutes, but I tell you what, given the topic today, PPP, and where we are and where we've come, and I think everybody on the line has been impacted. I just had a little bit more information maybe to help set the stage today for the discussion. So again, thanks to the Chamber and Steve McAllister for pulling this together. The timing couldn't be any better. We've all seen this process from the beginning till now have lots of changes. Most recently, some really positive changes. Anxious to hear more on the presentation today. So as we all know, the Paycheck Protection Plan has really consumed a lot of our time over the last 2.5 months, especially the small business owners, working to keep their doors open, but most importantly, to keep folks employed on payroll or bring folks back on the payroll. So we're staying very close to this process as things continue through, because through all the customers we've helped, we now have to make sure that we get through the forgiveness piece of this, and as that's going to be ultra critical to these small businesses as we move forward. So, we as a community bank have also poured a lot of time and resources into this, and we continue to do so to ensure that we can get folks through the forgiveness process. So, Nicole, before I turn it back over to you, what I thought I would do is talk just a little bit about, First United Bank and Trust and some of the PPP data that we have, just to put it into perspective. For one community bank in Maryland, obviously headquartered here in Garrett County in Oakland, year to date, we've done 1,063 PPP loans collectively for our bank as a whole. So remembering that our bank, our footprint's as far west as Morgantown, as far east over to Frederick, and down into Martinsburg, all the counties in between. Total loan amounts total $146 million to date in the program. The average loan amount is roughly $137,000. I think I hear a dog in the background, and that's normal. It's become very, very normal in these situations. So a couple other stats that I'll throw out there, and I think as we look at this program, 68% of the businesses that we helped had 10 or less employees. 44% of those total loans went to businesses with less than 5 employees. So we feel like we really got the dollars out to those small businesses, within our communities. The fact that we're on the Garrett County Chamber platform, I thought I'd narrow it down just a little bit to Garrett County. Year to date, we've done 319 loans in Garrett County, $46 million in total, and an average loan amount of about $147,000. So, we've been able to help a lot of business, a lot of small business, a lot of sole proprietors right here in Garrett County. So the last number I'll put out there, for the first time in my lending career, you can't measure success, sometimes through volumes and dollars. It really comes down to the employees that the dollars got to. As a bank as a whole, we've been able to impact close to 17,000 employees with regard to the PPP program. And, those employees, when we think about it, the dedicated staff that we had that put all the time and effort in, doing all this while working from home, instituting technology, the support of the community, a lot of CPAs, a lot of financial planners out there. It was a team effort to get to that point. But those employees, represent family, they represent friends, they represent neighbors, they represent colleagues. So that's what we're most proud about in this. And again, we're grateful to be able to sponsor the event. We're anxious to hear any bit of information that's new that's coming out, and look forward to what Steve McAllister has to present today. So appreciate it. Thanks, Nick.
Thank you so much, Josh. Those numbers are impressive, and we certainly know that Garrett County has been greatly impacted by the pandemic, and the PPP program has been definitely a lifeline for a lot of our businesses here. And based on what you've told us, just from First United's perspective, we know that there is a very high percentage of businesses in Garrett County that have received PPP loans. So today's topic is certainly on point, and we're delighted to have with us Stephen McAllister. He is the Executive Director for the Eastern Region of Congressional and Public Affairs for the U.S. Chamber of Commerce. And Steve has actually spoken on a previous PPP seminar for us before, and is back with some updates and to really fill us in on the new Flexibility Act, as well as the loan forgiveness. And as I said, we're also going to talk about what's next in legislation. Steve has definitely become a subject matter expert, and we're very glad to have him back with us. So, Steve, I'm going to turn it over to you, and I'll remind everyone, please mute yourselves and please put your questions into the comment box. So, Steve, the floor is yours.
All right. Is my mic on? Hello. All right. Good morning, everyone. Thank you for having me. And I want to first just give a plug to your community banks, just like First United Bank. They have been absolute great partners with the business community, working through this program, the Paycheck Protection Program. This is, and we're going to put up here now, we have a guide to the PPP loan forgiveness program. When we originally came out with this is the latest update. It was updated as of yesterday. When we originally started doing this, people like Mark Cuban started sharing it. People like Senator Marco Rubio, who was an actual author of the PPP program, was giving it to his constituents so they could understand it. They keep changing these, and that's why we have to keep updating this. And that's why I want to give a shout out to these community banks like First United, because when this first came out, it was on a Friday, and I believe the banks got the regulations around 4 o'clock in the morning, and then a lot of banks open up at 8 or 8:30 in the morning, and people were rushing in to take advantage of this program. So they've had to really take on a lot and work with the local business owners. Again, for this program, you are going to work with your local lender. So there is a lot of interaction on there. When we go through this, I'm going to stress, especially for the people that already are already in this program, they already have received their PPP money, that you want to continue to work with your lender, the person, the institution that gave you that, because the whole goal of this is you want to get as much forgivable as possible. You do not want to have to take on additional debt at this time, because there's so much going on. You know your business better than anybody. So the whole point of this program is try to get as much forgivable as possible. So I just want to thank your community banks like First United who are out there that are working with you, and it's not over yet. If you have this loan, please reach back out to them. You want to touch base. You want to go over these things. Bring this guide in, because it keeps changing all the time. Legislation keeps changing. The way it's administered keeps changing. So we're trying to stay on top of this as much as possible. This is our newest release with the most updated information that we have. But like I said before, they've come out with regulations at 4 a.m. and banks and institutions are supposed to implement those at 8 a.m. So you got to be ready and stay on top of this. So I think this is a good guide that will help. We'll make this available for you. It's on the U.S. Chamber's website. I believe it's going to be on your Chamber's website. And please share it, get it out there. We're going to go through that this morning. I'm happy to take any questions as we go through. I do have to stress, because you probably hear me say it a couple of times, for specific, this happened to me, this is in my business, my loan says X, Y, and Z. Those questions, I am going to refer you back to your lender, your local lender, because I don't have that information for specific. I can give the overall, this is what the legislation says, this is the intent, but how it's actually going to be executed is going to be done through your local lender. So I can't stress that enough, that relationship that you have, and hopefully you've had it for years to build. And if you are thinking about going for a PPP loan, if you have not done that yet, I want to flag something for you. You have to get in by June 30th. So before there was a rush, they were running out of money. Right now, we believe it is well funded right now. We don't think they're going to run out of money in the next couple of days, but June 30th is when you need to get in by. So if you're thinking about applying for a Paycheck Protection Program, please go meet with your local lender, and you want to get in there before June 30th. So, and then after we discuss this, I'm happy to take questions while we're going through, if that's what you'd like. Then I also want to touch on a number of issues going forward, what the U.S. House and U.S. Senate is working on, because this is all going to affect your business. There is not that many legislative days before the election. And you might be shocked to find out there's only 25 legislative days between now and the election. The House is not even there this week. Now, there is some rumors that they were going to cancel the August recess, which will give us some more time. But these are all things that we need to keep in the forefront, because we're going to talk about a number of issues that are all related to COVID-19 and the recovery, and they all need legislative action. And as we know, Congress doesn't exactly move things very fast until the right at the end. So I want to talk about the PPP. I want to talk about liability reform. I want to talk about unemployment, because that is a big issue that I'm sure a lot of you business owners are dealing with that right now, how they're looking to address that. Then if we have time, I'm happy to talk infrastructure, which is part of the next phase, the phase 4 phase. There is some talk that we may get some infrastructure legislation in that. Happy to talk time frame for phase 4 legislation. Right now we're saying we're at the CARES Act, phase 3, 3.5, depending on what you consider under the CARES Act. So the next phase, what's that going to look like? Happy to talk about that. And then any and all things U.S. Chamber, happy to discuss. So on the Paycheck Protection Program, as you know, a couple of weeks ago, they've updated this legislation. It was passed by the House, it was passed by the Senate, and signed by the President. I want to highlight the big changes. Now, I know I've met with you before. We kind of walked through the process. I'm happy to do that again if you'd like. But here are the big changes that happened from the time that the Paycheck Protection Program started to what it is now. They have now extended the time to spend your paycheck protection funds from 8 weeks to 24 weeks. We heard from our members. We heard from you. The 8 week was not enough. A lot of people were getting their loans in, but their state government wasn't allowing them to even return to work yet, but yet that clock was starting. So now the 8 weeks is extended to 24 weeks, and that is the money that you're spending on your employees, your salaries. That gives a little more flexibility to business owners. Some people weren't ready to go at the end of March. They weren't ready to go at the end of April. Maybe you have a seasonal employment, and now you're ready to go. Now you can apply for it, and you can use this money over 24 weeks as opposed to the original 8 weeks. So that is a big new change. They also lowered the amount that must be spent on payroll from 75% to 60%. This is huge, because when the original bill came out, the way it was administered is 75% of all the money that you received has to go to your payroll, meaning the people that you've laid off, that you're bringing back in. If you were not using 75% of that money on payroll, a portion of that was not going to be forgivable. And remember, the whole point of this is we want as much forgivable, and hopefully the whole loan, to be forgivable as possible. Now you only have to use 60% on your payroll. So you are allowed now to use more. That 40%, that's going to be on your mortgage, on your leases, on your utilities, and like I said, we can drill down a little more in a bit here, but just that's a big change. The formula, on the how they're going to reimburse you on this. They've also extended the deadline to restore your employees, and payroll from June 30th. So originally at the end of this month, these people needed to be back on the payroll, whether they were working or not. If you were going to include them, they needed to be on the payroll by June 30th. Now you have until December 31st. Again, this gives you a little more flexibility. See what your actual business can handle. See what your business can take on at this time. You might not need, you had to lay off 10 in March, you may not only need 5 now. Businesses are looking different now. Service businesses are looking different. If you own a movie theater, you may not need to bring back everybody, but hopefully things get better, things get back to normal, and then you got to ramp back up. Now you have a little more flexibility. You can bring people back on until December 31st and still have them qualify, their salaries qualify under your Paycheck Protection Program loan. And again, another big change here is settling the repayment term for loans made after June 4th. So your original loan terms stay the same, but if you went in and got a new PPP loan, and if you go today and get one tomorrow, you can now repay it over 5 years. Right now it's 2 years. They pushed that back 5 years. Again, it gives you a little more flexibility. So on the screen here, and again, that's just a quick overview on the 4 big changes. But on the screen here, if you want to drill down a little bit, this is our guide to the Paycheck Protection Loan Forgiveness Program. So as you can see, we try to break things down. This is a huge program, lots of in and outs. Again, I cannot stress enough, you're going to want to sit with your local lenders. You want to go to First United. You want to sit with them and go over the options to make sure it's correct for your individual situation. We want to see this loan become forgiven. We do not want to see you taking on additional debt. So if you scroll through this, you can see the actual program, how much will be forgiven, determining what your expenses are. These are all things that we talked about at our last meeting. I'm happy to go through them again if you would like. The majority of these things have not changed from the original. The major changes are the ones that I listed. Again, when you are going to figure out what your expenses, your payroll expenses are, that's going to be all your compensation for your employees, their gross salaries, their gross wages, any type of commissions that they received, any vacation, parental, family, medical, or sick leave that you provide your employers, any allowances for separation for dismissal, any employee contribution to group healthcare coverage is included in your payroll expenses. Any employer contribution for employee retirement plans is included in your payroll expenses, and any payment of state and local taxes assessed just on the compensation of your employees. That's all included in your payroll expenses. So when you go and sit with your local lender and you're trying to figure out what your payroll expenses are, that's the formula there. That's on the second page of this document under number 1, determining the maximum amount possible for loan forgiveness. As you can see there, it lists those things that I talked about here. Again, please note, if you're an independent contractor or sole proprietor, there are some additional steps that you'll need to do. It's highlighted in this, but again, you want to sit with your local lender to do this, because you want to know exactly what you're in for if you're taking on this program, because this has an opportunity. This loan can turn into a grant, which is the goal. They're non-payroll expenses, as you can see on the list here. I remember how I told you, now 60% of the loan needs to go towards your payroll expenses. Now you can use that 40%. You can use it towards your mortgage payments, your lease payments, your rent, and your utilities. This gives you a little more flexibility on using that money. What's best for your business? Again, it's going to be up to your individual situation. how much, like at least 60% is going to go towards your payroll, but it's better off using those funds to address some of those other issues that you have. On a side note here, when we're talking about the next phase of the CARES Act, phase 4, one of the things we are hearing from senators, I was on a call with Senator Susan Collins yesterday from Maine. She is one of the authors of this. She's heard back from her constituents. One of the things that she wants the Paycheck Protection Program loan money to go towards is if you need to make purchases for PPE, protective equipment, masks, gloves, she wants to make so you can use the money towards that, and that can be forgivable. Also, if you have to make some type of renovations in your business, we see that already. If you've been into a restaurant, or if you've been into different establishments that are reopening, if you've had to make some renovations because of the safety issues, putting up plastic around or whatever that entails, one of the things they are working on is making those type of expenses under the Paycheck Protection Program. I have to stress that is not what this legislation is right now. This is what's being talked about, but I just wanted to get that on your radar. As I said, things keep changing. We keep moving the way that these things are administered. So now you want to look, if we go down to 1B on here, it talks about identifying your 24-week period. Again, this originally was only 8 weeks. Now they've extended 24 weeks. We think that gives more flexibility to businesses, because now you get to use their salaries over a 24-week period instead of 8-week period. So if you're bringing people back and they're on part-time, it might be harder to hit the number that you need, but now you have 24 weeks to make it instead of 8 weeks.
Hey, Steve, we have a question from Melinda, and she wants to know if her payroll can exceed the 60% or 75% rule.
Absolutely, absolutely. But the minimum is, the minimum to get the reimbursement, it has to be 60%. But you could use it 100% just on your payroll. But they're trying to give the business owners some more options, because they also know you also have mortgage payments to make, rent payments to make, utility payments to make. But you can go more, but you can't go less for it to be forgiven. Does that answer that question?
I believe it does. We have another question, though. Is mortgage interest the only type of interest payment that is eligible for forgiveness?
Mortgage interest payments, rent or lease payments on real estate, personal property. If you have a lease or personal property before February 15th, when this started, those are eligible, and utility payments for businesses. That includes your electricity, your gas, your water, your transportation, phone, and internet service, anything that you had before February 15th. So the mortgage interest is the only interest that you can use at this time.
And our next question is, when determining what expenses are eligible, is it when the expenses are paid or when they are incurred?
Yes, it's going to be over that 24-week period. That is what the expense. So you want to figure that out when you're going in, when you're going in and meeting with your local lender. You're going to say, you have to kind of predict. I mean, you know your business, that over this 24-week period, I'm going to pay these employees X amount. My mortgage is going to be this. My utilities is this. And that's how you kind of come up with the formula of how much you're going to be eligible for.
So it's when they're incurred and not specifically when you pay that bill.
Correct, because the clock does not start until you receive the funds. So that 24 weeks that you have eligibility for reimbursement for these expenses, it does not start until the money is in your account. So say you go and you meet tomorrow, you go through the process, they tell you we think you're going to be approved. Then you find out you're approved. The clock doesn't start until you receive the money in your account. That's day one. that's when the 24-day clock starts, week starts.
And can you select any forgiveness period between 8 and 24 weeks?
No, it's only the 24 weeks once you get the money. That's the 20. It's if you get the money on Friday. Friday is day one, and then it goes out to 24 weeks.
Great. And Chris Rodeheber, who is the president of First United Bank and Trust, actually just posted that the Treasury posted a new interim rule and new easy application and revised application. And she did post a link to that website as well. So thank you, Carissa.
Excellent. Thank you.
So those are the questions we have right now. I'll let you continue, and I'll stop you as we have more.
Great. So those are the big thing is when you sit down with your local lenders, you're going to come up with that number again, because say you bring back 5 employees, and over that 24-week period, you start your business up again, and then halfway through, you say, it hasn't recovered what we were working for. It's just not worth. I can't afford to keep on all 5. I'm going to have to lay off 2 of the 5 that I already brought back. Unfortunately, if that happens, you are going to be on the hook for the remaining expenses, that salaries for the rest of that 24 weeks for those 2 employees that you laid off again. So those will not be forgiven. So you want to be sure, as sure as you can. I know it's very difficult, that as many people as you bring back, you want to be able to make sure you can keep them for the full 24 weeks at the minimum, because you need that in order to get the whole thing forgiven. If you bring people back and then halfway through you have to lay them off, unfortunately, you have to lay them off because your business is suffering, and then you're going to suffer even more because now you're going to be on the hook for the loan. It's a 1% interest rate that you need to know that information. You want to see what utility payments you were paying before February 15th, because that's all these things. Look at 2019. That's going to give you a snapshot of what it could look like. I think it's going to be, unfortunately, with the way everything is right now, you're probably not going to hit the same levels, but that is what they're going to be looking at. So record keeping is key for this whole amount. So here's the guide here. Please go through that. We're going to continue to update. This is the major update on that, but we will continue to tweak it. We actually also have a link at the top of this to the Treasury Department for where you can get the application as well, and takes you over there. Again, you fill out the application on the Treasury Department, but you bring it to your local lender. So happy to discuss that. I just want to touch on a few other things that was really going to affect your business going forward, what the U.S. House and U.S. Senate are working on now. The big thing right now, and we're talking about timeline, is the House passed the HEROES Act, which is kind of the next phase of the CARES Act. They passed that about 3 weeks ago. Unfortunately, that bill only had 1 Republican that voted for it. So it was a strict party line vote, which means the HEROES Act is really, it's not going to go anywhere in the U.S. Senate. The Senate, as you know, is the Republicans are in the majority there. So the HEROES Act is not moving forward in the Senate. So we are seeing what the Senate is working on. Senator Mitch McConnell, who's the majority leader there, he wants to work on liability reform first, then the next phase, then infrastructure. So that's what he is looking at. When he's talking about liability reform, it's for your business. If you reopen your business, you are doing everything and you can. You're following the CDC guidelines for safety. You're following the state's guidelines for safety. You're doing the social distancing. You're making sure your employees are wearing the mask. They're doing the things that they are required to do. They're looking for liability reform so you are not subject to unwarranted lawsuits. We are already seeing this across the country. As businesses are reopening and the business owners are getting hit with lawsuits after lawsuits on exposure. What we mean by that is someone returns to work, they end up getting COVID-19, they're now suing their employer because they got that. Unfortunately, unless you're working at a hospital or a high-risk place, it's almost impossible to know exactly when and where you contracted it. Did you get it because you visited some friends, you went to a cookout?
Hey, Steve, something has happened and we can't really understand you, so you may need to repeat that.
Yeah, sorry, I was on this end as well. I was saying with businesses that are trying their best, they're following the CDC guidelines, they're following the state guidelines. The Senate is working to get legislation that will cover them, that will give them some safe haven from these unwarranted lawsuits. We're seeing it across the country. Businesses are getting sued because they're reopening and then their employees or a customer gets COVID-19. Unfortunately, it's almost impossible to know if they got it at work or if they got it over the weekend, if they got it at the supermarket. So the Senate is working on legislation to protect those businesses that are doing their best. They're following these guidelines. There's got to be a safe haven. So that's the first part of the liability reform, which Senator Mitch McConnell, the majority leader, wants to work on first. The next.
Steve, we've lost you again. Steve? Steve, are you still with us? We cannot hear you at all. I'm not sure what is happening here. Steve, we still can't hear you. I'm going to try to answer a few of these questions while we're waiting for Steve to come back. Steve, please, just let us know when you've returned. So we do have several questions in here that I am not able to answer. And if we're unable to get Steve back, I will certainly send these questions to him and see if he can go ahead and get us answers for those questions. But we do have, as far as a few questions that I can answer, one by Carol that says, when is the best time to apply for loan forgiveness? At the end of the 8-week or the 24-week period or before? Actually, the best time to apply is when you're actually absolutely ready, that you have spent the money the way that best works for your business so that you can get the loan forgiveness and that you have all your paperwork in order. Up on your screen, you will see that we have a lot of information and links here on the PPP program, including the U.S. Chamber's Loan Forgiveness Guide and their guide for applying. If you have not yet applied, you do have until June 30th if you are interested in securing a PPP loan. But we do have all of the different facts here from Treasury, and we will add the newest one that Carissa Rodeheber sent to us and in the chat box too. So we will add that one on here that does have the easy. But this is, if you go to Treasury, they do have all their FAQs on here, which can be very helpful. They also have the loan forgiveness application, and you can fill this out right online. And as I said, we'll add the other link, and we'll add the easy link too. Some of the other questions, is Steve saying that you can pay more than 75% or 60% for salaries and it would be forgiven? Yes, that is correct. You can use up to 100% of the PPP for salaries. You just cannot use less than 60% for salaries. And then we have another question that is asking about subcontractors, and we're going to have to get some additional information on the 1099. Another question regarding insurance companies, that those exposure claims, and I believe that what Kate is referring to here is in regards to the liability issues, and that their insurance company told them that workers' comp would pay those claims unless there was other legislation that passes. I will tell you that that is still up in the air right now, and the liability is something that is a big concern and that we're still trying to work through. Steve, are you back with us?
I am. I just called in. Sorry about that. I don't know what happened. I was on a roll there, and then I saw that the connection was gone.
No worries. I'm glad you're back, though, because there are a lot of questions that I'm unable to answer. So I'll let you
All right.
finish.
Well, let's hear. So I can't see you now. I'm on my phone. So if you just, I believe I was talking liability legislation.
Yes, and we have a really good question about the liability that has to do with an insurance company saying that those claims, if an employee said, "Hey, I got COVID and I'm suing you for it as my employer because you made me come back to work," that those claims would be paid under workers' comp. But the last I heard is that is still being discussed, and that
Absolutely.
is not
That's
necessarily true.
Correct. That's the big fight right now. Who's going to be on the hook for these? Is there going to be some type of legislation that's going to give a safe haven, if you will, to the people that they're trying their hardest? They are following the CDC guidelines. They are following the correct rules. What kind of reforms can we receive? Who's going to be on the hook for that? That's what Mitch McConnell is working on right now. Because is it going to be the insurance? Is it going to be on an unemployment insurance? Who's going to be paying for these claims? That is the big debate that's going on right now. And we don't have the final answer. We are hoping to see some language, some legislation by the end of this week. McConnell had spoken to one of his local chambers this week, and he had mentioned that maybe Thursday or Friday. But it sounds like he's working with the administration at the White House on that too, so we're not sure. So we haven't even seen the actual language yet, and we're hoping that'll come out this week. Will give us a little more clarity on exactly what they're thinking and what direction we're going.
Okay. Well, we do have some more questions here, so I'll go back to those questions. And especially if anybody has questions during the legislation, we're hearing, though, Steve, that Congress probably isn't going to pass anything until after the 4th of July. Is that correct?
We're hearing the same thing, too. Maybe they get a liability, some type of liability done before the 4th of July break, but we do not expect any type of phase 4 to be done before the 4th of July, unfortunately. I spoke to another U.S. Senator earlier in the week. He thinks by August they'll have liability done, they'll have the next phase done, and maybe even an infrastructure bill done, but that's by August. So they will get a couple of things done before July 4th, but it's not really COVID related. There's some other policing type things that they're working on. There's a park bill that they're working on, an open space bill that they're working on. Stuff like that, but I think you're right on. I don't expect any major legislation on this to get done before July 4th.
Okay, and our next question then is, when a business is applying for forgiveness, what qualifies them for the EZ form versus the regular form?
The which form?
The EZ form versus the regular form?
You want to do the most updated one. I believe they're all moving it towards the EZ, but you're going to want to work with your local lender to get the exact one. But they're trying to make it more universal now.
Okay, and is vehicle insurance included in eligible transportation expense?
I believe insurance is a part of that. Vehicle insurance. I will have to follow up on that. I'm not positive. I don't believe so, but I'll have to follow up on that.
Okay, and regarding subcontractors, Perry says that he was under the impression that subcontractors used by the business were not a part of the covered expenses as forgiven under the rules because they could apply for their own loans.
They can apply for their own loan. It's all about how you use them in 2019. So if you're an individual contractor, you could do it on your own. But if, say, you really only worked for the one company, the one person, it's how it looked on your 2019 tax record. So for individual situations like that, you're going to want to meet with your local lender to see exactly if you, the business owner, can include them or not. They're the ones that are going to make that determination.
So if the contractor does not file for a PPP loan themselves, even though they were a 1099, then the employer that has contracted with them can include them?
You're going to have to check on that because you can't really double dip for the same salary. So if I was the business owner, if I 1099 them, but I have to bring them back, on that, you're going to have to speak with them. But I mean, for a real specific question like that, on the way it is, what that individual, the contractor, is going to do versus what you want to do as someone who 1099 them, I would work with your local lender on that to drill down that far.
Okay. Our next question is in regards to, I just moved the question. If you have an employee that does not want to work the same amount of hours as before, how do you handle the rule that states an employee cannot have a reduction in salary by more than 25% of first quarter earnings?
This is the big issue that we've been running into. I don't know if you heard, I was touching on the unemployment portion of this. Is trying to get people to return to work with that additional $600 that the federal government gives under the CARES Act on top of the unemployment that your state offers. Businesses are really having a difficult time bringing people back to work. And just like you said in this specific question, hey, I don't want to come back. I'm making more on unemployment, or I don't want to give up my unemployment. Can I come back part-time and stuff like that? This kind of is one of the unemployment reforms that we're looking at, because technically, you, the business owner, you call back Steve McAllister, and I say, well, I just want to come back part-time. I don't want to come back to what I was before. I want to keep some unemployment, or I don't want to come back because I'm making close to the same amount as I was with this extra benefit. Technically, once you, the employer, call me back, I'm no longer eligible for that $600. Fortunately, that puts the burden on the business owner, who's got a million other things to do, to contact the state to let them know they're no longer eligible. But that is a problem that we are running into on that. And so it all, because you, the business owner, are on the hook for what you applied for. So to get it forgiven, you need to meet those criteria. So unfortunately, that kind of puts it back on the business owner working with these employees when they come back. Because if you say, the salary is going to be X. You need to hit that number in order for it to get forgiven.
But you could hire someone to replace that person and fill those
Absolutely.
hours.
Absolutely. Again, it's not the money is not goes to the person. It goes to the position, if you will. So absolutely.
Okay.
So that's one of the tough situations that puts, again, that's just another tough wrinkle on the business owner to have to deal with all this stuff and trying to get back up and getting good people back up.
Well, and in regards to the unemployment, that is a big challenge that our businesses are facing here, as well as, you know, a number of a large percentage of small businesses across the country. They cannot compete with this additional $600 pandemic unemployment compensation. And we know that there's been talk of extending that pandemic unemployment compensation until January of 2021. And certainly our chamber has been opposed to that and has sent letters to our congressional delegation. But that is a big concern. Our businesses right now, even if you take take our restaurants that were just allowed to reopen indoor dining, and they were previously allowed to open outdoor dining, you know, they already have capacity restrictions, but they are further limited by not being able to hire enough employees to provide the service that they need for their customers. So you might have a restaurant that can open at 50% by law, but they're only able to open by 30% because they don't have enough employees.
Exactly. And this is a big issue that we are hearing. We have the same position as your chamber on that. You know, we need people to return to work. There's going to be a big fight in the Congress on, are they going to extend the $600 or not? Are they going to reduce it, keep it? That is going to be a big fight. One of the things they are talking about that I want to highlight for you is maybe getting a return to work bonus. So they cut off the $600. I mean, it's all got to be negotiated, but this is what they're talking about. I get called back into work, Steve McAllister, but I want to, you know, I was making the additional $600 on unemployment. You know, I don't know if I want to come back, health is, whatever the issue is and stuff like that. Instead of getting the unemployment, I go back to work and I receive a $450. That's the number that's being quoted right now as a return to work bonus. And this would be for 6 weeks. So I return to work. I'm making what I was making, but I'm also getting an additional $450. One of the things they're talking about, making it retroactive as well. So your people that did come off and help you out and go back to work, they would be eligible for that too. That's one of the compromises that they are looking at, but this is going to be a big fight in the next phase of what to do with that $600 unemployment benefit. Are they going to extend it? Are they going to reduce it? Are they going to get rid of it? Is there going to be some type of return to work bonus? Again, the latest scuttlebutt this week they were floating was a $450 return to work bonus that your employee would get for 6 weeks.
Wow. Well, I know that we're getting close to the end of our time period here. I did want to mention one other thing that was passed as part of the new Flexibility Act for the PPP program, and ask you to just briefly touch on this, Steve. I understand that the Flexibility Act did change the law so that anyone who receives a PPP loan is now also eligible for the employee retention tax credit, where they were not eligible previously.
Correct. And that's one of the things that they may be beefing up that in the next phase 4, that employee retention tax credit. That they may be starting to transition out of PPP in the next phase. Instead of re-upping it, they may try to transition more into that employee tax credit type program. At the U.S. Chamber website, we also have a one-pager. We call them one-pagers. They're usually about 2 or 3 pages, but we have a breakdown on that employee retention tax credit guide. Just like this guide for the Paycheck Protection Program, we have the employee retention one. I ask that you look at that. We continue to update that as well because that's right on point. That looking forward in the next phase, we are hearing, again, this is just what we're hearing, that they may try to push that more. That's one of the first steps, was making you eligible for both, and now they may push to extend that tax credit to give more flexibility.
Great. Thank you, Steve. And I do have a copy of that guide, the Employee Retention Tax Credit Guide, up on the screen. Again, all that information can be found on the Chamber's website under our special coronavirus section. We have a business resources section. So you can find additional information, but again, the Flexibility Act did allow for any businesses who received the PPP, they are now eligible to also apply for that employee retention tax credit, and that could be a significant savings for you. So I would encourage you to go to our website and click on the links to check out some of this additional information. Steve, this was fantastic. Great information this morning. I know there are still some questions that are pending regarding the subcontractors or 1099s, and we're going to probably need to dig a little bit deeper to find out exactly when an employer can include those subcontractors as part of their payroll. Steve, I greatly appreciate everything that you and the U.S. Chamber have been doing during this whole pandemic. The guides you have put out have been tremendous resources, and we have put all of those on our website, and you all have been great providing speakers for us for these type of programs. So thank you so much, and we're going to continue to work with you, especially as we move forward with additional legislation and dealing with the liability issues, which are a huge concern, as well as unemployment. So any final comments, Steve, before we wrap this up?
No, thank you, and I apologize for the technical difficulties there. I was running around between 2 rooms trying to get you back up, but looked like the phone was the way to go. So I apologize for that, but we will definitely keep everybody updated and through your chamber on all those issues that you touched on and much more. So I thank you. I know it's got to be very difficult to own a business right now, and I wish you all the best. And please use your chamber as a resource. That's what she's there for. That's what we're here for on the federal level. That we are advocating for you guys every day.
Well, thank you very much, Steve. I also want to thank again First United Bank and Trust for sponsoring the program this morning. If any of you have additional questions that weren't answered, please do not hesitate to email them to me, Nicole@garrettchamber.com, and I will definitely work my hardest to find out those answers for you. We did record today's webinar. However, I had technical difficulties in the middle too, so the webinar may be broken into 2 different segments here. So hopefully we'll at least have some information that was recorded properly, because Steve did a great job. Thank you, Steve. I hope all of you have a great day. And Steve, I'll be talking with you soon, especially about some of that infrastructure in regards to broadband development. You and I have talked about that before too.
Absolutely. That's a top issue for us, a top issue. And we're hoping, we're starting to get some momentum on that. So,
well,
they got a lot of things going on, but the fact they keep bringing it up is good, and broadband is right at the top within the infrastructure. So we will definitely work on that.
Well, perfect. Then we will stay in touch. Everybody have a great day. Steve, thank you again, and thank you, First United Bank and Trust.